in the forex market, there are certain precautions that you need to take way before you can trade. I wish I knew all of this the time I started, or the time I was a beginner. Way before, I wish. So now, in the forex market, it's a market where it needs you to manage the risk and the precautions that you need to take or to follow. If ever you are not, then come on, you won't make it. And secondly, I always say to people, learn how to lose, then you can be able to know how to win. Not to win first. Okay, learn how to lose. Then you can see the strategies, tactics on how to survive the losing. Okay, and to be transitioning yourself to the next level, which is winning the profits. Forex trading is not for everyone, and I repeat that again and again and again. Okay, and the time forex hits people and people realize that this is not for me, they start to what can I say, they start to devastate. They start negative words to put out there that forex is a scam and forex is not, and big institution trade, and they undertake these precautions that I'm going to speak about, you know. So now I say to you that forex is a journey. No way that you're going to skip that one. No way. Even if I can give you my strategy to say, here's the strategy, go and trade with it. Okay, but there are certain things that you are not aware of. If you don't have a discipline, patience, there's no way to survive. Thirdly, there is no something called a robot that is winning always. A robot is something automated that is executing trades without having a fear, because a robot is not a human. Okay, and the robot doesn't care how much you have in your forex account. Robots is executing each and every time. Okay, despite that, there is a default setting that you set to say after 4 trades do not execute, and then close my trade after 1 hour. Or robots are different, but I'm not using that. There is no way that the robot it will be 100%. I'm speaking about the beginners, because this is how they think in the forex market. Number one, the risk or the precautions that a forex trader has to undertake. Okay, stay alert for scams. 1.1, avoid unrealistic promises. Let me read this. I'm going to read, okay, because there are some certain notes that I'm prepared before, and after that, after reading one by one, I'm going to explain what I meant. Avoid unrealistic promises. Forex trading isn't a shortcut to instant wealth. Success requires time, effort, as well as knowledge. Okay. Now, this is exactly like if you are in varsity. You take 4 years, 5 years, and perhaps to 6 years, and you are patient about it. And it's not like it's guaranteed that you're going to be employed with a certificate or the degree that you have attained or acquired from an institution. As well as the forex market, if you learn and you deposit real money and you trade with it, it's not that guaranteed that the wealth is coming to you. It's not. And don't act like it. Don't act like it is like that. It's not. And the question is, why do you have to go to varsity and be patient and consistent on studying different modules, long modules? And even though you know exactly that it's not guaranteed to go to an employment or to be employed, fully employed from the state, corporate firms, or in the government sector, it's not. But why in the Forex market we always hurry things up? Or is it because you see money? Is it because you are on Instagram? Or is it because you see successful YouTubers that are integrating Forex market through YouTube? Or is it because you see the luxurious life and luxurious assets that they buy constantly and then they share off on social media? Yeah. All right. Now, 1.2, verify brokers. Okay. Now, only trade with licensed and regulated brokers. Teach participants how to check brokers' credentials with authorities like FCA, ASIC, or FSCA in South Africa. Why? Because this is so imperative. And you as a trader, you need to comprehend that even if you're using your own local broker, having an actual physical card, you need to make sure that the local broker is complying with the authorities or the seniors above, right? It's important, but most of us, we don't, because they are on the public and they are not afraid, because they're doing the right thing, and we tend to relay and trust the banks, because the banks, they know the compliance and they constantly comply with the seniors in the financial services providers. Okay, but not in brokers. Brokers are more that are not complying, even though they are complying. But that simply means that it doesn't, let me say, it doesn't mean when the broker is complying with the seniors and then they will be accurate and loyal to your trades and your execution, your withdrawal, your deposit, they will accept it 100%, that one. But on withdrawal, sometimes they delay, it takes 7 days, sometimes it takes even 14 days. Sometimes they reject the process, they reject the transactions. Why? Because they are not complying. Even though they are complying, but there is no inspection, there is no assessment, they don't check. The seniors, they're not even there. And even new traders, retail traders, you don't tend to report that there is a certain broker that is holding my $1,000, $2,000. Why you don't report? Why you don't report? You report. Please type your comment down below and tell me that we tend not to report the brokers only because that blah 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 blah. If my broker denies the payment or reject the payment, I inquire instantly. I inquire. I don't even wait for 24 hours. I inquire because already I have received an email from them, from the finance department, that we have rejected your transaction of withdrawal. So you need to, maybe sometimes, if you call the broker and threaten them that if you don't unlock my withdrawals, I'm going to report you, because your website down underneath, it shows that you are complying, even you have FSP number. You know why? Now 1.3, be cautious with signals. Don't blind trust unverified trading signals or automated trading services. Those things. Do not be optimal on signals. Okay, you can take signals of a person or a mentor that you trust and make money, but learn it in your own way. Learn how to analyze, learn how to strategize, learn how to come up with a technical analysis, learn how to incorporate the technical analysis and or signals of your mentor with your own analysis and see that you're right. If you're right, and most of the time regularly you are right, then withdraw yourself from the mentorship and do it by yourself. Simple as that. Simple as that. Simple. Now, number 2, practice smart risk management. What is risk management? What is that? What is risk management? Based on your local bank, in your local bank, you don't care about the risk management because 1, I spoke about the bank is always complying. Secondly, you trust the bank because you've been with the bank more than 5 years, even a decade. So there's no risk management. Thirdly, you're not trading with your money. You're not investing. You are just using your local account with savings account as well as budgeting and withdrawing, whatever. And you're using the very same account to receive your monthly salary, if you're working, or your small business enterprise, and then you incorporate your small business enterprise with your local bank account. So there's no risk management. But in the forex trading, good people, risk management is something. It's not something. It is an information, 1. Number 2 is something that you need to maintain it each and every time. Each and every time you need to maintain it. Now, 2.2, I said, start with small investment, or you use a demo account for practicing and begin live trading with a minimum funds. What is a minimum funds? If you're trading using the rand, request a demo or visual account of 1,000 rand, a visual money, it's demo, and so that you can cultivate yourself, be exposed on how to trade, how to lose it, and how to gain it, and how to execute, how to place lot size. And this lot size, this particular lot size can be able to, I can be able to manage the risk of this much, because the indices are not the same as currencies. There are currencies that are not volatile when you're using 0.10. Okay, so you need to practice that on demo account. Number 2.2, I said use stop loss orders. Show participants. Okay, I as a mentor, I can show you how to limit your potential losses for every trade. It's your stop loss. It's your stop loss. Okay, yes, most of the traders, they don't love stop loss because there's something called a stop loss hunt. But Paul David once said that, what if you can execute where you place your stop loss, and you will see how much you constantly earning a lot. Because where you used to place your entry, the market doesn't favor that, and the banks, they already know where you execute as the trader. They're on the support and resistance, they're on the line, they know that. This is why they react in a certain way to manipulate your price and hit or trigger your stop loss. Simple as that. So I love the statement of Paul David. Shout out to you. And this is powerful. This is powerful. It's something that someone can backtest it or using on a demo account. Shout out to you. And number 3.3, leverage with care. Okay, explain how leverage can amplify both profits and losses. and suggest keeping it low. The leverage, good people. Now, what is a leverage? A leverage, it's 1:100. That's the leverage. How much you're willing to lose when you have 1,000 account. You're risking with 100. That simply means the broker credits you with the money that you don't have. It's a leverage. So they are leveraging your account with the credit. Okay. And then they combine them together. Now, when you increase from 100 to 500 leverage, now you're increasing a volatility. The more the profits will run faster, or the losses will run more faster than the normal leverage of 1:100. Because I still use 1:100, and I won't change. I won't change it. And why should I? This is a way of managing your risk. Why you need to actually? Are you trying to be a millionaire or a multi-millionaire? No. Now, let's jump into number 3. Prioritize learning.
And then understand the basics. Stress the importance of learning key Forex terms, market functions, and strategies. Now, you need to understand only the basics. Only the basics. Don't confuse yourself. My friend once said, too much information is toxic. Too much information is toxic. Because if we want to learn Forex trading, rather to stick with the mentor, we rather go to an internet and through multiple YouTube channels and learn how to analyze, how to perfect the strategy, how to guys, it's a lot. This one is telling you about the ICT, this one is telling you about the SMT, SMC, this one is telling you about a price action, this one is telling you it's toxic. Too much information is toxic, because you'll end up following a lot of Forex traders, and a lot of them are people who are not trading. I'm telling you. Now, your control emotions. 3.3, control the emotions. As I said, teach traders. I, as a mentor, teach traders to avoid impulsive decisions driven by fear or greed. Okay, what is an impulsive decision? A decision to think mentally that if I can deposit $20 and then triple it to $1,000, how it will be, and then you end up doing what? You lose it. Come back, you deposit 100 USD, and then you lose it because your focus is all over to 1,000 USD or to 2,000 USD. Now, how the hell are you going to deposit a lot of amount of money? I mean, a small amount of money, and then you go into expecting a huge amount of money, which is 1,000 from 20 to 1,000. Yes, it's possible, but not for you. It's possible for someone who knows what they're doing there, not for you as a beginner. A beginner is someone who needs to learn the basics way before they can attach themselves to that imagination, okay, of having 1,000 USD in their account, because it's hard as a beginner to reach 1,000 USD. More especially if you're not working, you can't find your accounts, your family is poor, you can't find your accounts, yeah. Now, then number 4, listen to number 4. Be aware of market risk. 1.1. Know the impact of volatility. What makes an impact on the volatility? What makes the volatility to be there? Let me read this. A mentor, someone who teach you, may explain how sudden economic or political events can significantly affect market prices. You as a beginner, you might not know what causes the market movement. Secondly, you might not know what causes the market or the price to react crazy. The spread, which is the ask line and the bid line, to react crazy is because of political and economical factors, which is we publicly call it fundamental news because it's news, Now, number 4.2, avoid overtrading. Caution against making excessive trades in an attempt to recover losses. Now, this is a revenge trading. Now, this is often backfires on you. But if you have lost your 500 USD or your 500 Rand, instead of you not to go out of the market in that specific period or in that day, you rather continue trading with fear of missing out, with revenge trading. You want to gain more because you've lost more. All of those things is called overtrading. And in other words, it's called psychology in trading. Psychology in trading involves many things. It involves your subconscious mind and your consciousness and the emotions. Because money is emotions. When you execute what is agitating through your body, you feel butterflies, so it's something else. Number 5, safeguard your information. 5.5, secure trading accounts. How do you use that? Something called credentials. You use your username as well as your password or two-factor authentication. Username and password are default, and then two-factor authentication, which is your face and your finger, those ones are not on default. Those ones are on your choice, but they are recommended. You need to do that. 5.2, keep information private. Good people, as a mentor, I should remind you, never share your logins with any other people, including your mentor that you trust. Them you trust, don't share that. More especially not a Forex Trading MetaTrader account, but an online login from your broker website. So your login details are the most crucial part ever. Besides Forex, everywhere, your bank account PIN, your phone PIN, your laptop PIN, everywhere. It's secret. Okay, those are the credential information that you not need to share to people or publicly. Now, number 6, understand the legal and tax requirements. Now, we as the South Africans, we need to understand that we are living in a country where it's depopulating each and every day, and we need to understand on how we can secure ourselves and our businesses, not for non-compliance. That was the introduction about that. 6.1, know the rules. Participants or the traders must familiarize themselves with trading regulations and tax obligations in their region. What is our authority or the senior in our tax? It's SARS, South African Revenue Service. You need to comply. Already, if you comply with a compliant broker, going to pay tax. But if you are not, if the broker is not complying, then you will owe SARS and a lot of money, because you'll be trading and you'll be making profit. So you need to secure yourself from that. Maintain records. 6.2. Recommend keeping detailed records of their trades for legal and financial reporting. I don't know if traders will accept this one, to record and maintain their financial reporting, as maybe we don't know, they might be useful in future. But yeah, I record, okay, and I journal. 2 ways, okay. And number 3, I have a bank statement from my broker that is recording already, and I can request it anytime, as well as my local bank account. It has the statement, so I can just combine that together and then publish it in my Excel spreadsheet. Number 7, stay updated. Simple as that. You stay updated. Monitor the global news. Explain the importance of tracking economic updates and their potential influence on forex market. You need to stay updated, and you analyze the market trends. Even who they call them, long-term traders. Long-term traders are people who trade executing, looking at a daily chart to weekly to monthly. Okay, they're not even go to 4-hour time frame like us. No. They are going to daily, at least, max monthly time frame. Those people, they still checking the market. They still checking the global news. What affects the currency they're trading? What affects the financial pair they're trading? They still do that. And you need to, because it's so imperative to understand what changes the market, what changes the currency of dollar, what changes the rand, what changes the dollar, the gold, what changes the silver, what changes Nasdaq, what changes S&P 500, what changes USDT. Okay, you need to understand, and you need to think it in your mind that it's reacted in this way, and then they might affect my trades. Let me get out. Or it's my favor, they will be on my favor, so I need to leave my trades and make more money. Okay, so in the forex market, you need to stay updated. 1. Number 2, regularly, if you are a long-term trader, regularly analyze the market once a week. Just analyze the market, how it's reacting once a week. Or if you are an intraday trader, you need to analyze the market at least 3 times a week, at least, but max should be 10. Okay, but as a scalper, that one I'm not sure, because you are always on charts. I'm not sure about it, but I don't recommend scalping, because for me, it never worked out. Scalping has never worked out for me, so this is why I don't recommend scalping. And I think, and most of the traders who are the new beginners, they tend to scalp. And most of them, they have realized that scalping, that is not real trading. What are you trading? Secondly, fundamental news is work out for me. For you, it is working for you, but it's not sustainable. That is not sustainable. Okay, and on top of that, there's something called fundamental trading. Fundamental trading is someone who trades in a minute, 2 minutes, 3 minutes, and they make a lot of money. More especially if they have the huge accounts. It's a lot. And as long as you can make a lot of money, a lot of profits, you can also lose it in a matter of a minute or 2 minutes. That's how it is. This is why I don't trade fundamentals, and I hate them. I hate them. Yes, we check the Forex Factory and investing.com, what is happening in the globe, but I don't trade them. Okay, even people that are around me, they don't trade that things. Okay, we need to go and understand what is going on, how it's going to affect the market that we're trading, and then that's it. Because we know the NFP, how it's going to react. If it's going up, we know that it's going to affect the dollar in which way, the gold in which way, Nasdaq in which way. You see, so we know, but we don't like tends to execute from 2:30 or 3 o'clock. No. That is not sustainable. But then, if it's working for you, go for it. Go for it. If you haven't subscribed, please subscribe to this channel and hit the bell notification. If you have anything that you wanna ask, pop it in the comments below. And please, there is a Telegram channel link down there on the description box. You can just click and join, because we already having or hosting every Friday, Saturday and Sunday webinars for the beginners and the intermediate. I'm still on an intermediate, okay? And whatever the information that I have, I think is so important to, to share it out, so that people may learn. Maybe they will learn more than me. They can make money. Okay. Cheers.